Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How's it going today? This is a short video series we do called FinTips, where we just go over the basics, something rather one-sided, one point, just real basic, and sometimes really geeky to try to help you out. We're financial advisors here at Jazz Wealth Managers. Check us out at jazzwealth.com. We don't even use cookies, so we won't follow you around the internet. You can just check it out and then leave if you're not interested. It's all good. Well, today I want to cover something. I'm getting this question a lot. Dustin, should I be investing in REITs? I want to be involved in that. I see what they're doing. I want real estate, man. I want to invest in that. What do you got for me? Well, I like it, right? I like the idea of investing in REITs, but there's limits here, of course. I don't want you to get too heavy. I want to show you a few things here today, kind of walk you through it and let you know why maybe you want to participate. Just don't go crazy, right? Don't dive in too deep, and I'll explain why as we go. So on the screen here, we'll show you real quick. This is our REIT fund's performance relative to the S&P 500. Just showed it for the beginning of this year until now, as of this taping. The dark blue line is our REIT fund outpacing the current S&P 500. Now, let me say this. We are not like magic that, oh wow, these guys are great, somehow they're doing this. The REITs in general have been on fire. I mean, since the beginning of the year, one of the best performing areas of the markets, right? So if you happen to look up any form of REIT ETF, if that's how you want to participate, you're going to be impressed, right? It's going really, really well. So at first glance, you take a look at this and you go, whoa, I want to invest in that. That's incredible. No wonder. I keep getting these questions a lot. People want to participate in them. So at first glance, you go, things look good. I want to be a part of this. Not to mention, if you dig a little bit deeper into REITs, you get about half the volatility of the overall stock market. What does that mean? It just means that the price fluctuations that you see relative to the market, whoa, I can do that. That's pretty cool, are a lot less. And so there you go. REITs are performing better. That's a check. You get half the volatility of the markets. That's a check. Our dividend fund currently pays 3.62%. That's better than the overall S&P, which is paying 2.07%. So I get a better return, less volatility. I get the dividend, remember, so the total return is going to be much better there, isn't it? Well, like all good things, there's some catches, right? We want to look a little bit closer here into these things. So our dividend fund is there. Of course, if you want to check it out, it's on our website. All of our portfolios are always available for you to see their performance. We do not invest in just one, by the way. We'll always use a mix of different funds for you. So what we did here is we compared the S&P 500 to real estate REITs, a couple of them, over, well, we went back pretty far here, over 10 years. The dark red line is the S&P 500. Those blue lines that you see, those represent the different REIT funds that we put up there, the ETFs that we chose to use. I just kind of I picked them. I didn't like cherry pick or anything. I just grabbed the first three that I could think of, put them in there. ICF is one. We talk about it on the closing beat a lot. The most important thing I want you to focus on here is, in the long run, you're missing out if you go too heavy into REITs. If you dive in 100%, Dustin, I want that money, man. Get in there and do the REITs for me. You're going to underperform in the long run. So if your goal is to participate with the market or grow as aggressive as possible, well, you don't want to be too heavy in REITs. I hope that really sort of illustrates the point for you there on that chart. So REITs, great investment, less volatile. They're paying high dividends right now. Of course, total return looks pretty good right now, but that's just right now. There's a reason why I showed you only the performance of our fund from the beginning of the year till now. REITs don't do that forever, right? It just happens to be a really good time for them. So the moral of today's story is, yes, you can include them. We include REITs in our aggressive mix. For those people that come to us and say, I want to be aggressive, I'm young, I can, you get a little REIT in there, but we don't go too crazy. We include that in our moderate mix of funds, which you can see all those funds on our website. But again, the moral of the story, don't be too aggressive in REITs. You will regret it in the long run if you go too heavy when it comes to your retirement, okay? So there you go. That's all I have for you. If I helped you in some way, hit the subscribe button. I'll really appreciate it. Or check us out at Jazz Wealth. Be sure to dig through all of our funds there. And if you have any questions, let me know. Always happy to help. I will be the one to speak with you if you ask questions.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.